Hello, Jacqueline. Good evening. Good evening. You are first, so if you ask the first question, you'll get it answered. Hello, Van Salkwyk and Lucian and allemaal van julle. Hi, Jacqueline. Let me have your question quick before somebody jumps in with questions here. Good evening, Jose. That is Gibson. How's it, bud? They keep on saying I must say hi to people. I don't know how to say hi except for saying hi. Unless there's some funny things that I can and cannot do, I'm not 100% sure. I know how to go live and answer questions, that's about it. So, how you all doing, folks? Hope it's going well. Okay, that's not going to work. Paul and gift vote, can you believe it? Interesting stuff. We'll have to figure this thing out as we go. Good evening, Lorato. Any questions so far? That's what we do on a Wednesday evening, folks, is we answer questions. Oh, that's not going to work so well. Jacqueline, fantasties, ek's bly. As ek jou net gehelp het van TikTok af al klaar, is dit uitstekend. Maak net seker op die einde van die dag, wanneer jy nou finaal iets wil doen, dat jy net die regte persoon kry om dit vir jou te doen. Ok, weet jy wat het ek vir jou gedoen het, Jacqueline, maar ek's baie bly, regtig waar. Just Me is joined, and JP, how's it? And Zolf, how's it? And let's see how things are going here. Smart Choices, he's joined. You guys have such interesting names. Issy Mishi invites you to co-host. No, Issy Mishi, you can't co-host. JP Fullard, hallo my maat, hoe gaan het vanaand met jou? There's really a couple of things I must figure out about TikTok Live. I'm just scared I'll let JP Mishi join here and then she's not the type of person that we want on this thing. Anywho, last week, folks, we had, at some stage, we had consistently 70 odd people on the call, and there was a lot of questions. So that's why I'm saying, if you have any questions, ask them now, since you are first on, and let's get them answered before all the questions starts coming. Good evening, Wendy. Welcome to you. And how's it, Danelle? Ntukosa says, justice for Shweshwe. Don't have a clue what you're talking about. But Ntukosa, if you say so, then by all means. But I honestly don't have an idea what you're talking about. Jack has joined Mio, Baigo. Good evening, folks. And so there is a few people that have gone off already because they obviously don't like my shirt tonight or something like that. Invite Tony Nkleko to join live as a guest. I don't think so. And Mbaso, you are in with the first question of the evening. If you receive the lump sum money, what one thing you need to do firstly? So I believe that if you have received the lump sum of money and you've got debt, that's the first thing you do. You go and kill your debt. Make sure that you don't have more debt. Then the second thing you go and do is you go and get yourself an emergency fund. So you put some money away for further crises. If you don't have debt, even better. Then you just start putting money away and get yourself a bit of an emergency fund. It doesn't have to be huge, just something that if there's a crisis that you can handle it. And then once you have done that, once you have sorted out your debt and once you have sorted out your emergency fund, then you start investing with the rest. So that would be my advice to you. And you know what the bad thing about that little bit of advice is, Mbaso, is I give that advice to so many people, and very often people then don't go and kill their debt, or they kill just a bit of their debt and then they make more debt and then they sit in the same situation. So whatever you do, it has to go hand in hand with absolute financial discipline. You have to be disciplined with the money that you've received. Good evening, Anel. Shiko, you say, what percentage of your salary should go to a home loan repayment? Well, that is a very interesting question. So I'm going to answer it back to front for you. And that's to say, I believe that 10% of your money you should save, 10% of your money you should invest, and 10% of your money you should give away, donate. So that's 30% of your income. Then from the remaining 70% that's left over, I would say that you should not be spending more than about 10 to 15% on a home loan. And I know that people are going to say, listen, yeah, you're ridiculous, because if I earn 100,000 Rand, what am I going to buy for 15,000 Rand? Well, you're going to buy a house for 1.5 million. And yes, it's not going to be as nice as the house that you can buy for 3 or 4 million Rand. But at least then you live in your means and you don't get penalized and you don't suffer when the bond rate goes up. So I would say if you could get away with 10 to 15% on a bond, that's fantastic. 20% if you stretch it. But if you go and you listen to what they say that we are allowed to spend on bonds, and that is based on the loan acts and everything, then it's like 25 to 30%. But honestly, 10 to 15%, and if you really have to push it, 20%. But preferably not. JP Fullard, where's the best place to invest? JP, it's so difficult to answer that question, my mate, because there's so many good places to invest. These days, if I had to go and list the number of investment houses that I believe is good, as well as the different types of investments that one can do, I am most probably going to give you a list of 25 to 30 companies. And it's difficult, but I'll tell you the basics. I do believe that the big four, so to speak, is good. That would be Old Mutual, Sanlam, Momentum, and Liberty. I like them for investments. Then I also do believe that your big investment houses, Allan Gray, Coronation, Marriott, Investec, which is also called 91 now, is very good to invest in. But then there's Old Mutual International and Sanlam International, which is very good for international investments. And then you've got alternative investments with companies that does livestock funds, entrepreneur funds, venture capital, crypto arbitrage, etc., etc. And there's quite a number of those companies as well. Just between the arbitrage, which is Future Forex, and between the venture capital funds, which is Altitude, I've now already given you basically 12 different companies that you can invest. And it's going to depend on the type of investment you want to do, how much you invest, what you want that money to do, how long you want to invest it, and what your tax implications is. Those questions that I've just answered, or those pointers that I've just given you, is much more important than choosing the investment vehicle or choosing the investment house that you're going to do your investments. So take that to note, because whether you make use of Old Mutual, Sanlam, or Liberty, or Momentum, or any of the others, on their underlying platform, as we call it, they've got an investment. They say you've got an endowment, you can invest the money here, and then you must pick the fund that you're going to invest in. And that is the platform. And all their platforms, all these companies have all the other companies' portfolios on there. So even if you invest with Sanlam, you can invest in Momentum and Old Mutual and Investec and Allan Gray funds. And so it goes for everybody. So that's why I say it's not so important which company you're going to invest with. It's more important the fund that you choose, and that fund is in line with what you need. I hope that answers it for you, matey. That was for you, Mr. JP Fullard. Donate, gosh, 10%. Yes, Jerry. It's amazing. The Bible says that we should tithe. When you give, you always get more. It's amazing how wonderful it is when one gives 10% of everything. And I'm not only talking money. I'm talking money, time, effort, helping people out. 10% is what I say. But hey, if you want to do 2% or 5% or 20% or 30%, it's up to you. There's one thing, there's a philosophy that I believe in, and that's absolutely true. The more you give, the more you will receive. And I experience it in my life. The more I give, the more I receive. So yes, 10%, nice benchmark. If you don't know where to go or how much, then that's what I would say you do. Okay, so let's see. What did I miss? Okay, that was 10%. Is Discovery a good institution to take an RA out with? Who would you recommend? Knowles, I've just answered that question. I did not put Discovery in the group of companies that I spoke about now, but there is nothing wrong with Discovery. I personally just don't like their platform. I don't like their funds. I don't think that they are as good as some of the others, and I think they are a bit on the expensive side. But Discovery, the one thing I can tell you, the one thing that Discovery is very big on is their vitality. And they work on vitality rewards. And that's the one thing. If you do take up something with Discovery, whether it's an RA or an investment or a life policy, and you make sure that you keep your vitality status as high as possible, then there is most probably no other company that's going to beat them, because the bonuses and everything that you get because of that vitality, that gives you a major boost in terms of your investments. The problem for me is with Discovery's vitality is that as much as they promote it, I believe that there's not more than maybe 10 or 15% that's on the top tier and that's really benefiting from it. The rest of the people are just paying money to Vitality and not making use of the benefits, and therefore not getting the benefit of the benefits. Okay, I hope that answers it for you. Does a whole life cover hold as security for a loan in South Africa? Sintabo, yes indeed. If you go and take out a bond or a loan, or a bond or a loan mainly, many banks, yeah, my cat decides I'm not allowed to talk to you guys. She wants me to talk to her. Anyways, when you go and take out a bond or a loan at the bank, then very often they do ask for security, and then life cover, whole life cover is the thing that they want. And that's the thing that you see to them as security. And with regards to that, you have, if you've got your own whole life policy, you can actually cede your own policy to the bank or a portion of your policy. Otherwise, they will normally try and get you to take life cover with the bank, which you can then cede to them. But you don't have to do it through the bank. So if you have a bond that you're taking up through a bank and they say, listen here, this is compulsory, it is a prerequisite for you to get your bond, they are normally going to try and convince you that you have to take the cover through them. Go and find yourself a few quotes, because you could most probably get something that's better or cheaper or more affordable. And then you also don't need to always take whole life cover. You can take term life cover. So instead of taking a policy that's going to run for the rest of your life, you can choose to take life cover that's just for a specific term. And normally that life cover, that term life cover, is cheaper than whole life cover. So if you have a specific need, you need specific cover for a specific period of time, term life cover very often can be a better answer than whole life cover. And let's see who's next here. Agreed. Sorry, folks. There we go. I have to go back to see that I didn't skip somebody. Because this happens once I have to start answering question. Jog Pesano, 8%. If you're talking about this, donations or tithing or anything, Jog, absolutely. If 8% is what you want to do, then 8% is what you want to do. If you're talking about returns, then I have no clue where we are now. Olomia, what advice would you give an 18-year-old who's trying to be financially free by the age of 30? Oh, man. 18-year-old that wants to be financially free by the age of 30. Okay, so here it is. You start reading books. You start reading books on discipline. You start reading books on business. You start reading books on self-motivation. You start working on yourself. You start doing everything that you can to educate yourself, to grow yourself emotionally, financially, spiritually, and physically. That's what you start doing. So invest in yourself. That's what I would tell an 18-year-old. Yes, you're going to want to save money and whatever the case might be, but at the age of 18, unless you are highly qualified, which you most probably won't be because you haven't been to university or you haven't started a business, then invest in yourself. Go and do the stuff that people that become super wealthy does, and that is invest in themselves. They read books. They listen to books. They make notes. They go and change their life in line with all of that so that they can become the best version of themselves. And if you do that, you will become financially free by the age of 30, because you will either start a business or you will learn to work on the minimum of your income, and you will get so used to it. You will be so comfortable by doing that, that by the time you get to the age of 30, you either have started a business and doing well, or you're living off 50% of your income and you're satisfied with that. And then you are financially free. The person who can live off less than what they earn will always be financially free. It doesn't matter what you earn. If you can make sure that you live off 50 to 70% of your personal income, no matter how much you earn, if you can do that, you are financially free, and you will be financially free for the rest of your life. How will you advise me, as I'm new in a million bracket and I want a shopping center? Is it St. Thabo Patrick? I'm not sure if I'm reading this right. And how will you advise me, as I'm new in a million bracket and I want a shopping center? Is it wise? If I understand you right, you say you've made it into the million mark in terms of investment or saving or cash in the bank, whatever, and you want a shopping center. Is it wise? One question, Thabo. Do you know how to run a shopping center? Do you know how to run a business? Are you willing to take the risk? Okay, sorry, it's 3 questions. Do you know how to run a shopping center? Do you know how to run a business? Are you willing to take the risk? If the answer to those 3 questions is yes, then why not? Go for it. But if you can't answer that, and I promise you, 99% of people can't answer yes to all 3 of those questions. So if there's only one of those 3 questions that you can't answer yes to, move away, China. Don't even think about it. Leave it. And there you see my beautiful wife closing the door because of the mosquitoes. Let's see. I have a lot of financial questions. How do I speak with you? Okay, so Zintabu, if you want to speak with me, it's actually not that difficult, mate. You go into the profile here on TikTok, okay, and then you will see that in my profile I've got a WhatsApp number. I also have a website. You could go to the website. There's an email address through which you can contact me. And then you contact me, and then I will get back to you on one of those 2, either the WhatsApp number or the email. We can then set up an appointment, and then I can meet with you, be that in my offices at Krugersdorp or be that with the Teams meeting, and then I can answer all your questions. Now, Thabo, I hope you know I do get a hell of a lot of requests, and for that reason, I do ask a consultation fee of 1,000 Rand. For the first consultation. After that, any further fees or commissions we can discuss. And if you do not wish to pay a 1,000 Rand consultation fee, then you can speak to one of my advisors. I've got 11 of them. As of next week, there will be 12 of them that you can talk to. And I will put you in contact with the right person that will be ideal to deal with you. So you tell me in your WhatsApp or your email what you want to discuss. And if you want to meet with one of them, I'll make sure that I put you in contact with the person that's going to be most suitable to your needs. Okay, so let's see. KK, is it possible to go on early pension and withdraw all your vested pot money? So, when is early pension? Let's answer that first. Early pension, there is no such thing as early pension. You can go on pension anytime from the age of 55. If your company says that the retirement age is 60 and you still want to retire at the age of 55, then it is seen as you're retiring early, but you're not taking early retirement. So the second thing is, no, if you go on to retirement, so anytime from the age of 55 and onwards, you cannot take all your money because now you are retiring, so you take 1/3 in cash and 2/3 is monthly income. In order to get all your money, you have to resign by the age of 45. By the age of 55, just before you get to 55. But KK, stupidest thing that you can do in your life, because you are going to be so heavily taxed because of you withdrawing the funds. Trust me, you don't want to do it. It is a stupid thing to do. So now that we've gone into the two-pot system, the one thing I can tell you is for future years, because of the rules of the two-pot, in the future, for somebody that has saved a certain amount of money into the future on their vested fund, they will not be able to withdraw that anymore. But this is a transition period, and it's going to be different from person to person. For some people, they're going to get that transition period out of the way in 1 year. For other people, it's going to take 10 years. Any case, let's not get too technical about it. So YYK, if you go into retirement 55 or later, it's retirement 1/3, 2/3. If you want to withdraw the money, don't do it. Stupid thing to do. And then you must do it before the age of 55. You are resigning and you're losing a job, and you're also losing 18% of your pension fund money that you have to pay on tax. And do you guys know what is the biggest asset that you have in your life? Your ability to earn money. People don't understand it. People think, I'm going to build wealth and assets and everything by saving money. Yes, that is how you're going to become rich. That's how you're going to become wealthy. But your biggest asset in life is your ability to earn an income. So as long as you can work, that's your biggest assets because you're earning income. As long as you can run your business, that's your biggest assets because you're earning an income. There we go. What do you call investment pays you every month? So in Devo, there is a number of those things. If you've got an endowment that's older than 5 years, you can start drawing money from it, and that can be an income. If you've got unit trust, you can start drawing from that, and it's an income. If you've got a savings account at the bank and you're drawing from the interest, that's an income. If you've got shares and you draw the dividends, that's an income. If you've got a house and you're renting it, the rental income is income. So there's a number of things that is called an income or an investment that pays you every month. But if we are talking about pension fund money, the 2/3 that has to give you an income, then it's either a life annuity or a living annuity. If it is discretionary money, meaning voluntary money, the money that you've saved up yourself, be that in a bank or any other investment, then you can also take it in the form of an income annuity. There's differences in the technicalities, in the taxes, etc. But that is the income products that you get through the insurance houses. But like I just mentioned, there's a number of ways that you can draw an income and see your investment as an income for every month. I hope it answers it for you, mate. Let's see who's next year. Rix, this is what I'm doing now. Live on minimum to prevent eating cat food after retirement. Oh, Rix, I understand exactly where you're coming from. I absolutely understand where you're coming from. Sad thing is, Rix, I've actually met people in retirement that were eating dog food because they didn't have an income. And this is why I'm so absolutely passionate about people saving and investing and not drawing the retirement funds before retirement, or taking the money to go and do something with, or thinking that it's going to be better in their bank account than with the pension fund company. So you live on a bare minimum, and trust me, this is the one thing that people don't understand. You can live on the bare minimum and be happy. People think money makes them happy. Money does not make you happy. If you cannot be happy in yourself and in your environment and with what you are doing in life, you're never going to be happy, no matter how much money you earn. So to be happy, you have to learn how to discipline yourself to live on less. If you can discipline yourself to live on less, You use less of your income, you're investing more money, and you become happier. And the reason why people become happier then is that the more money you've got in your bank account or your investments, the more peace of mind you have, the easier you sleep at night. I wish I could get that concept through to people. Any case, how's the deal maker? Good evening. Whoa, there we go. Sorry, folks. Every now and again, this thing just jumps ahead of me and I miss it. Do you do Sharia investments and are the returns good? Sam, yes. We actually spoke about this last week. Yes, we do Sharia investments. And yes, the returns are good. I have honestly not had a look at those fund fact sheets for a number of months. But the last time I checked them, they were doing good. I don't think they do as good as some funds like global funds. But it's purely because global funds are allowed to invest into alcohol and tobacco and earn interest and so on, which Sharia investments cannot do. But based on how Sharia funds are structured and what they can invest in, yes, I think they do good. As a matter of fact, it does better than what you will be earning if you put the money in your safe because you don't believe in earning interest, for example. So yes, Sam, absolutely, sir. Okay, Tabo, I'll see you. Knowles, I'm based in Krugersdorp, my mate. So you're welcome to come and see me. You're welcome to contact me. KK okay, you say you're 55. Now, great. Do yourself a favor and contact me just as I said to Tabo now. And we'll set up an appointment for you and we'll do a planning session for you. And then I'll show you based on a planning session, okay, whether you can or cannot retire and how much you're going to get. I had a meeting with a gentleman today and I made the mistake. I thought he said he wanted to retire at the age of 55 while he's actually going to retire at the age of 65. And the calculations that I did, because I thought he's going to have to retire at 55, showed, and he's got 3 years to go, that he had to save almost 90% of his income if he wanted to reach that goal. But then we said, okay, no, I made a mistake because it's not 55, it's 65. Then when we went and we had a look at his current contributions up to the age of 65, then suddenly we found out that what he's contributing at the moment is enough. He's going to have a comfortable retirement. So time and investment goes hand in hand. Time and investment goes hand in hand. So KK, please don't just go and withdraw your money. Don't just go willy-nilly. Especially if you don't have a good track record with handling money. Speak to somebody. Get some good advice. I beg you. Okay, let's see who's next. Charlene, what is the best way to do offshore investing? Wow, Charlene, that's such an open-ended question. And the reason why I say it's open-ended is because there's just so many options. You can do international investments with your 11 million that SARS allows you to invest internationally on a yearly basis. So that's the one thing. You can take your full 11 million on a yearly basis and invest that. If you do that, there is a variety of investment places that you can invest where you are going to pay less dividends tax, where you're not going to pay tax, where you can have an investment that you can start using as an income. Plenty of ways by making use of international investments. Then you can go and make use of what they call asset swap investments. So when we talk about these global portfolios, it's an investment that you do in South Africa, in a portfolio in South Africa, but they do an asset swap. So they take your money and they go and invest it internationally. And then when you want the money, they bring it back and you take the money here. So you can do an asset swap investment. Then, of course, you can go and do the alternative investments like the arbitrage, where they actually make use of the allocation that you've got, that 11 million allocation, to do crypto trading on a guaranteed basis for you. It once again comes down to that old question: when do I want the money? What is the money going to be used for? How much risk am I willing to take? How much money am I investing? It's always my well, not always, but mostly my opinion. Sorry, folks, mostly my opinion that you don't need to do any offshore investment where you physically take your money, invest it offshore if you are going to stay in South Africa. Then you can make use of an asset swap investment. But if you plan on going to have a holiday offshore or stay offshore or anything like that, then an international investment would be more ideal. So Charlene, plenty of options. Need advice on it, you contact me and then I can go through with you and an international investment specialist to give you options, okay? What is your take on Dealmaker? What's your take on GINS Global US Equity Index as an investment vehicle? Dealmaker, I have no idea what the GINS Global US Equity Index is, to be honest with you. I don't make use of that. I've never looked at that. I'll have to go and research. Absolute 100% honest. There's so many of these indexes that it's not even true. And at the end of the day, if you do invest in an index, it's like investing in a passive fund, as they call it. Oh, sorry, I was a bit thirsty there. So what I mean by that is, everybody often talks about the S&P 500. So everybody knows the S&P 500. If you invest in South African shares, then you know about the top 40 on the JSE. So if you're going to invest in a passive fund, a tracker fund as they call it, then they're going to take your money, they're going to put it in the top 40 shares, and they're going to look tonight and they're going to say, when the markets close tonight, this company in the top 40 had 3% of the top 40, this company had 2.8%, this one 2.6%, and so they're going to go through until they've got 100% of the makeup of that top 40. And tomorrow morning when the market opens, that's where your money is lying. Then tomorrow evening when the markets close again, they go and they say, how did this reshuffle? And they reshuffle your money like that and they put it in. So with the click of a button, they move you around as the shares move up and down. It's a passive fund. So this GINS Global US Equity Index is most probably going to be exactly the same. When I say exactly the same, it's going to be an index that's going to be tracked. I don't like tracker funds. I like actively managed funds. I like to know that the portfolio manager is keeping his thumb on it, that he's watching the markets, that he's constantly checking, that he makes decisions based on what he sees happening out there. So yeah, can't tell you anything about the index, but I just gave you a bit of background about how those things work. Ndivo says, what is better, getting a lump sum invest it and pay off the home loan, car monthly or settlement? Car monthly or settle. Okay. So Ndivo, I think that what you're asking is what's better, to go and pay off the home loan or go and pay off the car? I very much have given this answer previously, but I'll give it again. There's no set rule, because the time that you've got left on your bond or on your financing, as well as the interest rate that you pay, have a big influence when one goes and you actually do the calculations. You might find that it might not even be good for you to settle either of these two, depending on what those interest rates is or how much time you've got left. But a simple rule of thumb, the simple one is to go and say, okay, what is my home loan interest rate? And let's say it is 11%. What is my car interest rate? 14%. It then means that you are paying higher interest on your car than on your home loan, and therefore it would... No, I don't think so. It then therefore makes more sense that you are paying off a car because the interest rate is 14% than paying off the home loan, which is only 11%. Okay, but then one has to go and look into it deeper, and that's what I'm talking about. Is your car you only need to pay off for 5 years. Your home loan you need to pay off for 20 years. So if you're in the beginning of a home loan, then the interest that you're going to pay over the next 5 years on the home loan, even though it's a lower interest rate, is going to be much more than what it's going to be on the car. So again, easy rule of thumb is there where you pay the highest interest rate, that is where you're going to pay off first. But it is not the be all and end all for everybody. So I really recommend that people just go and make use of a bond calculator, a finance calculator, an investment calculator, and then you go and look at that money that you're going to put in, and you put it into those calculators, and you see, based on that, where it's going to be best for you to put it in. 9 out of 10 times, it's going to be better on the higher interest payments. I hope that answers it for you, mate. Anela Bacchus, good evening. Can you please explain bond layering in detail and the minimum allowed to invest? So Anela, I don't know what the minimum is in bond layering. That I don't know, because I don't believe in bonds. I think it's a good investment for people that really want to be conservative and safe with their investment. But what bond layering basically means is the following. Bond layering says, let's say you've got 100,000 Rand for argument's sake. Then you can go and buy a bond for 6 months. And they're going to tell you the bond interest rate on that one is 7.8% for argument's sake. And you can go buy a second bond for 1 year, and that one will be 8.1% for argument's sake. And then you can go buy one for 2 years, and 3 years, and 4 years, and 5 years, until you've used up all the money that you want to put into this bond layering. And that's basically what bond layering means. It means that you buy a bunch of investments in bonds with different time periods so that you have payouts at different times. So depending on how far apart you take it, how many months, how many years, whatever the case might be, you can now go and create an investment portfolio for yourself that gives you money back at the end of every year. That's what bond layering basically is. But we used to do that, and I know some people still do it. We used to do that in the 90s and the 2000s specifically with endowments, where guys would do numerous endowments for people to pay out in certain times. And what's happened ever since is that the rules and the flexibility has changed to the point where you can actually do one investment for somebody, and it incorporates or creates exactly this layering type of effect. So in our industry, that's not something that's being used very often anymore. But once again, I don't like the bonds. I feel it is absolutely something that people that are very conservative and that wants to play very safe with their money should use. But for the normal investor that wants to grow money and see their investment grow, not such a good investment. Assassin, hello sir, how's it? Is ons gelimit op een vraag? José, jy kan vra. Die enigste ding waarop jy gelimit is I changed to English because I want everybody to understand. And the second thing is that I try and get through all the questions by 7 o'clock. And sometimes I do and sometimes I don't. So if I don't get to all your questions, then I apologize. Let's see what's next here. Assassin says, whoop, and there goes Assassin. The one moment I saw him. Detected end live, whatever that means, I have no idea. Sorry folks, I'm just scrolling back. I missed somebody's question here. Whoa. I wanted to know, how would 2/3 of your provident, how much? How would 2/3 of your provident fund is paid out every month? How it's calculated? So Assassin, the 2/3 is calculated based on the type of income you're going to take. If you're going to take a living annuity, then you can choose the percentage income that you want. And you can choose anything between 2.5 and 17.5 per year. And then it's either paid out per year or it's paid out on a monthly basis. Don't take more than 5 or 6%. That would be my advice. Or you can choose a guaranteed income, and the guaranteed income is determined on the guaranteed term you're taking, whether it's a single life guarantee, whether it's a joint life guarantee, whether you want increases on it. So there's a number of factors, and then it also depends on what the annuity rate is or the guaranteed rate is for that week. So how it's calculated is, like I say, there's a whole lot of factors. It depends on the type of product that you choose, how it will be calculated and what you will receive. Okay. KK Triple YK, you say I'm not 55, I'm 44. Well, then even bigger reason for you not to withdraw your pension fund money. Even bigger reason. And KK Triple YK, even if you started working at the age of 24 and you're 44, you've saved 20 years, my dear. You're trying to save 20 years, call it 15%, and you expect that to last you for the next 40 years. You would never have had enough growth. Never, 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 ever. Don't do it. Okay. Zakele says, I saw you talking about GPF, said it's a great fund. Is Old Mutual Super Fund a good fund? Oh yes, Old Mutual Super Fund is a good fund. I've dealt with them on numerous occasions. The Old Mutual Super Fund, the cost structure is good around it. And then they've got these two wonderful funds, which is called the Core Balance Fund and the Absolute Smooth Growth Fund. And those funds give very good returns on investment. And I believe that a lot of the people that are invested in Super Fund are in those funds. So absolutely, Zagele, I will say that is true. Nick, is SA retail bond safe? Yes, it's a safe investment because at the end of the day, SA retail bonds has been offered since the day that retail bonds was available. So this is from, most probably 50s or 60s already. And there's never been a default on bonds. Not that I know of in any case. So yes, it's a safe investment. Once again, I won't invest in it. The return is good in terms of the percentages, but then the tax have to be taken into consideration, then it's not so lekker. Jose, am I in the wrong for taking out life policy on family members for my future? Jose, I love this question, mate. No, I don't think you're in the wrong. I think that taking out life cover on family members for the future is one of the best investment strategies in the world. People say, yeah, but you see, now you're going to benefit from somebody who dies. How cruel are you? How heartless are you? Because you're going to take out a life policy on somebody, hoping that they die, hoping that you're going to get this life cover. My question is always, as a mother and father, do you want to leave a legacy behind for your children? Do you want to leave them money or capital behind? And 99 out of 100 times people say, yes, I want the best for my kids. I want my children to have the best possible future. Now, if that is so, mother and father, then take out a life policy on your own name. And if you do not pass away and your family does not need it, then one day in the future, you can give that policy to your son or your daughter. And whether you keep on paying it or they keep on paying it, doesn't matter. Let's say you are 65 years old, you don't want to pay for this thing anymore, and you ask your child to pay for it. That child starts paying for that 1 or 2 or 3 or 5 million rand life cover when they are 65, when you're 65. Let's say you die at the age of 85 and they've had to pay it for 20 years. The premiums that they've paid for those 20 years is never, ever, ever, you would never make up the growth. So the premiums, what I'm trying to say is, the premiums is only going to be a fraction of what the life cover is. You could never save those premiums with enough growth to get that life cover. So just say, no, I don't think you're in the wrong. I think if one positions it correctly, then absolutely one of the best investment strategies in the world. Investment is in gold and silver, especially with our current economy. Jose, I'm not a big fan of either gold or silver, to be honest with you, sir. I find that in the past, if you look at the graph, okay, gold and silver is one of those things that if you're willing to invest and leave it for a long time, then absolutely do it. Because then it's like any other asset class that the longer you leave it, the safer it is and the better the investment return is. And it goes through the up and downs. I mean, if you look at gold and what gold was doing pre-COVID, it was not very good. But then when we went into COVID and came out, then gold was very good. And then we went through this American elections and gold. Yes, so there's periods that it's doing very, very well. But then there's periods that it's not so good. And it's one asset class. And that's what I don't like. It doesn't matter whether it's gold, silver, these forex traders that trade between rand and dollar. I don't like those type of things because it's one asset class that you are playing and you're bargaining on one asset class performing for you. But if you say to me, listen here, I'm going to put it into a fund where I can buy gold, silver, platinum, chrome, whatever the case might be, across, much better. Then I feel more comfortable because then my risk is spread a bit. But personally, I won't go into those. Just those, so to speak. Invite Uninspired to join live as a guest. Why would I invite somebody by the name of Uninspired? Okay. Thoughts on crypto? Twisted Wire. My thoughts on crypto is crypto in the beginning was an absolute, what do you call it? It was a high risk, new type of investment that not too many people knew about. And now crypto is becoming like shares. Crypto has reached a certain peak. It's had a fantastic run. And now it's becoming like shares. Now it's a question of, just like with shares in companies, you have to go and check what the market is doing, when cryptos will be doing well, when it's not doing well. It's affected by other market influences, etc., etc. So crypto personally, because I don't know enough about it, and because I don't specialize in it, I won't invest in crypto. But crypto arbitrage is a different story because crypto arbitrage has got technicalities between where it's bought, where it's sold, and that you can build in or that you can get a guaranteed growth with a trade. So that I'm not too unhappy about because there's something that I understand better and that I say, okay, I understand that I can do something like this. I don't think crypto is bad. I think crypto is here to stay. I think it's good. I just won't venture an opinion about whether I think it's going to go up or down. But I won't venture an opinion whether shares are going to go up and down either. That's just me. It's because I don't like to play in that space. I like to go with good value investments where I know that I might not be shooting out the stars and get 30, 40, 50% return on investment on a yearly basis. But the investment that I do, I know I'm going to beat inflation, depending on the risk, by 3, 5, 7% per year. So I know over a long period of time, I'm going to build very, very good wealth. That is where I feel comfortable, and that is what I advocate. Tabu, top 40, is it wise to invest in South Africa top 40 indices? Mate, I suppose it's okay. I mean, they're not doing bad. They're not fantastic. But like I say, I don't like the passive fund. So personally, I will not recommend it to anybody. But I know there's a number of equity funds that makes use of it and are doing pretty well. Oh, thank you, White Line. Appreciate that comment. Let's see. What does this mean? Detected end live to avoid suspension. I don't know what that means. I have no clue. Oopsie. There we go again. Folks, if I miss a question, I do apologize. Every now and again, this thing makes this funny jump and then I miss a few. Okay, let's see. Okay, 10 to 7. We've got some time. Kwai Lappe. Hi Corneille, hoe kontak ek jou? Okay, Kwai Lappe. In my profile is my WhatsApp nummer. Op my website is daar 'n page waar jy ons kan kontak en 'n e-mailadres. En dis hoe jy my kontak maak. As jy my op een van daai twee kontak, dan sal ek weer toe terugkom en van daar af kan ons verder gesels oor wat jou behoeftes is. Kwai Lappe. I love it. Knowles, my financial advisor is linked to Discovery and my investments are with Discovery. Is this a problem? No, not at all, Knowles. Like I said, I'm not the biggest fan of Discovery investments, but If you are invested in good funds with Discovery, then there is absolutely no problem with it. Two things. Is your financial advisor well educated? Is he giving you good advice? Is he making sure that he's doing reviews with you? Is he making sure that he is moving portfolios if needed to? That's the one thing. You want to speak to an advisor that is well educated and that gives you advice in line with where you are in life, what your risk profile is now, where you should be moving to, and how your risk will change into the future. That's the first thing. Well-educated advisor. Second thing, is he choosing good funds for you? No advisor is ever going to choose the best funds every year and you're going to have the best returns every year. But a well-educated advisor that gives you the right funds should be able to pick funds for you that is going to give you the returns that you need to get based on what your risk profile is and your strategies. So that's the thing. That's what you have to ask yourself about your financial advisor. And if the question or the answer to both is, I've got a good financial advisor and he's helping me to invest in good funds, no problem. Doesn't matter which company is associated with them. As jy in 'n ander land is, betaal jou lewenspolis nog steeds uit as jy sterf. Kwailappe, I'm just going to change the question against to English. If you are in another country, does your life policy still pay out if you die? Yes, indeed it does. We've got a lot of clients that moves internationally to work on farms, to work in Europe and all those places. You inform the insurer that you're going to work there. They keep your life cover in place as long as you pay the premium. And if you pass away, then it pays out. It will pay out in South Africa to either your estate or to your beneficiaries. But yes, it stays in place, which is a very important thing. Do you have any knowledge on Old Mutual Global Equity Fund? Yes, Dealmaker, I do. It's actually one of the funds that I love using, the Old Mutual Global Equity Fund. And the reason why I love using it, its returns, its average returns has been 14% on average per year since the day of inception, which was 2001. So for 24 years, it's given an average return of 14%. So yes, I love that fund. I really encourage a lot of people to invest in that fund. And personally, I've got a lot of my own money also invested in that fund. Who's next year? MB, I have 9 years left of work, over 400k in my bond. Do I pay the bond or invest the extra money in an RA? Oh my goodness. MB, my mate, it depends on how much money you have. Depends on how much money you have in retirement annuities and pensions. It depends on how long it's going to take to pay off your bond. It depends on how much risk you can take or cannot take. It depends on the interest rate of your bond. It depends on the returns on investment that you're going to get. So, as I say normally to people, it's easy to throw out a question like this in one sentence, but your question is this short and my answer is this long. For the plain and simple reason, there's so many factors that has an influence on whether I say to you, yes, put it in a bond or no, put it into an RA. I won't put 400k onto an RA in one go because the only rebate you can get is a maximum of 350,000, and then you have to qualify for a 350,000 rand rebate. Not everybody gets a 350,000 rand rebate per year because the rebate is linked on a percentage basis to your income. So once again, a couple of technical things that has to go into the equation. Okay, so again, as I said previously, contact somebody that you trust and ask them to do the calculations. And if you speak to a financial advisor and you give him this question and he doesn't ask you a list of questions like this, and then go and do calculations, then run away, because then he doesn't know what he's doing. If he's not asking the right questions in order to get the right answers, just get away. Very, very true about life policy. Thank you, Eminem. True about gold, it is above platinum now. Yes, and at some stage it was way below platinum. I do not like all the shiny stuff. I like this shiny. This is my ring, and that's the only shiny thing I like. Marcelo, 2.9 million with Alan Gray. Contribution 14k per month. 20 years left before retirement. Will I be okay? Well, Marcelo, it looks like you're going to be okay because let's do a very quick calculation here. Where are we? I just want to do something very, very quickly here. 14, 1 to 3 times 12 times 20 equals 3.36 million plus 2.9 million. 6.62, and then with the growth, you're most probably going to end up with like 22, 25, 26 million when you get to retirement. But that's not the question. The question is, what's the income you're going to need when you get there? On a big amount like this, let's say that you get to retirement and you need an income that is equal to 20,000 Rand per month in today's terms. So at that stage, it will most probably be 80,000 Rand a month. But it is the same buying power as 20,000 Rand today. Then I think you're going to be okay. But you get to retirement and you actually want 100,000 Rand a month in today's terms, you're not going to be okay. So you see, Marcelo, it depends on what you're going to need. So I can't tell you. I think for a lot of people, what you've got in your investments or what you're saving up will be great and fantastic. But it very much depends on what your need is going to be at retirement, and then the projections of your investments, whether it says there's going to be enough capital to give you that in retirement. So Marcelo, you might need to book a consultation with somebody as well to get some advice, mate. Oopsie. I got retrenched at the age of 40 and got 2 million, got another job. Where can I invest? Nshlamula control. Yeah, interesting. I don't know how many times I'm going to have to say this. I got retrenched at the age of 40, got another 2 million, got 2 million Rand, got another job. Where can I invest? Man, I can't tell you. I wish I could. Because I don't know what your situation is. I don't know what you need to do with this 2 million Rand. I don't know whether it needs to grow to a certain amount. I don't know what your tax rate is. I don't know if you've got financial dependence. I don't know if you've got debts. There is so many questions that needs to go and be asked in order to do a planning session. Because you see, if I tell you take that 2 million Rand now, okay, and I say to you, go and put it into a unit trust investment, and you do that, but you're sitting on a tax rate of 41%. In 10 years from now, when you withdraw that money and you have to pay capital gains tax on your 41 or 46%, you are going to be so pleased with me for giving you that advice, because you're going to pay so much tax on that investment. But if I tell you to take that 2 million Rand and go and invest it into a life investment endowment, and then you get 10 years from now, you get the money out of that, and you are sitting on a tax rate of 18%, then you're also going to be upset with me, because then they've taxed you within the fund by 30%, so you've lost 12% in terms of taxes. So I can't give you an answer. Like I say to everybody, there's a lot of information. You need to sit down with somebody that can do proper planning, and only once proper planning has been done, then one can make a proper recommendation and give you advice. Okay. So as I told everybody else, profile, WhatsApp number, website, contact me. We take it from there. I give you advice. Do you think this is a buyer's or seller's market in shares, both offshore and SA? My mate, I'm not going to tell you, because I don't deal with shares. I think there's good shares, there's bad shares, and I do also think that it's always a buyer's and a seller's market. It depends on how you play the market. But I don't play the market, so I'm not going to give you an opinion on which market I think it is at the moment. What are your top 3 equity funds? So the Old Mutual Global Equity I told you I like. Old Mutual MSCI. Feeder Fund I like. I like Alan Gray's Global Equity Fund, the Orbis Global Equity Fund. If we're talking local equity funds, then I like Alan Gray's Equity Fund. I like Investex Flexible Fund. And I like I like, what was the other one? Marriott Equity Fund. I almost missed that one. Invite Gijs Kok to join as a live guest. Gijs, shall I invite you? Let's see what happens if I invite you. Do you have any knowledge about trust to avoid tax? Trust you do not do to avoid tax. Okay? So trust is not done to avoid tax. Trust is done to protect assets. Yes, you are going to save a specific tax, but the tax that you're going to be saving is estate duty tax. Okay? So then it just means that you have to move your assets into a trust so that you don't get estate duty tax that you pay on your value of your estate. So that is, a trust is a long conversation, really long conversation. Any case, folks, I see that we are at 9 o'clock, so TikTok's going to start sending me these other things now again. I wonder now, I just want to see this. Huh? I don't understand what's going on. Any case, Marius van Tonder, what is your net worth? You're talking about my net worth, Marius? Why would you want to know that, sir? I tell you what, set up an appointment with me and I'll tell you. I'll show you. But I'm not going to disclose it yet. How would you advise a 23-year-old to invest, take home 8K, no debt, saying, Anela, how much would you... Oh, wait, hang on a second. This is what I was worried about. Just need to put that little thing there and then it should sort me out. How would you advise a 23-year-old to invest, take home 8K, no debt, staying at home? Hey, Anela, first of all, go and put money into a savings account, okay? If your take home is 8K, you want to have anything between 24 and 48,000 Rand in the bank. That is your emergency funds. That is your kick-off money in life that will make sure that if there's crises, you can sort it out. Once you've saved that in the bank, saved, separate bank account, you don't use it per month. Then you start with other stuff. Then you start investing in life investments, retirement annuities, unit trust, tax-free plans, whatever the case might be. Folks, I'm going to run through the last of the questions quickly because it is time to switch off and to say goodbye. I see it's 7 bells. Let's see if there's one or two more questions. Die markte doen maar sleg. Yes, markets may be doing well, but that is the nature of markets. They've got up and downs, up and downs. The important thing is that when we invest, people always want the best returns now. I want the best returns over 6 months, 1 year, 2 years, 3 years. Investment is supposed to be a long-term thing. And if you look at that, then you don't care about what the market is doing on the short term. The important thing is, go and have a look at the JSE, go and look at the Dow Jones, go and look at any of those things. And go and look and you will see the little graph goes up and down, spike down, spike up, whatever the case might be. But if you go and look at it over a long term, and you can go and look at basically any term, 5 years, 10 years, 20 years, 30 years, the trend is it starts here and it ends there. And that's what you want with investments. It doesn't matter what happens in between. Doesn't matter whether the market's doing well or bad, good or bad in between. You just want to start here and end here. You've got a good investment there. So don't worry about the markets not doing well. Only time you have to worry is if you're a stock trader. Okay, I think that's it. My son, 21, I want to set up something he can gain from. Should I put it in an RA or investment for him? Kunta, that is a very difficult question once again to answer because it depends. Do you want your son to have some money in 5 or 10 years or 15 years that he can use? Or do you want to save for him until retirement and not let him have access to it until retirement? If you want money on the short term, you'll do an endowment or unit trust. If you want it on the long term, you'll do it on a retirement annuity. Okay, folks, that's it. I have to run. It's 7 o'clock. I'm hungry. I need to get out of here. So thank you very much, all of you, for joining me again tonight. And I really appreciate all the nice comments to everybody that said thank you. And I'll leave you with this. Mark says, my RS has fallen by 500k in last 2 months. Mark, if your RS has fallen by 500k in last 2 months, you either have very big RS, okay, or you are really in bad funds. Either way, contact me, let me have a look, and I'll tell you which one of the two it is, and I'll tell you whether you should be worried or not worried, and I'll tell you how you can fix it into the future. Have a great evening, everybody. Love chatting to you all. Keep well. Bye-bye. Bye-bye.